So let's talk about one of the biggest questions in trading. What really makes a trading strategy profitable? I mean, not just for a week or a month, but consistently over the long haul. We're going to break down the hallmarks of a strategy that actually works.
You have to wonder, right? What's the real difference between a trader who has a solid winning strategy and someone who's just, getting lucky? Well, I'll tell you, it's not some secret code or a magic indicator. It's all about having a systematic, well thought out approach. The best way to wrap your head around this is to think about building a house. You wouldn't just grab a hammer and start nailing boards together, would you? Of course not. You need three things: a solid foundation to build on, a detailed blueprint so you know what you're building, and the right tools to actually get the job done. We're going to use that exact framework today. Okay, first things first, we have to start with the most critical piece of the puzzle, the part everything else rests on, the foundation. And in trading, your foundation, that's your edge. Honestly, without an edge, nothing else you do is going to matter.
So, what in the world is an edge? This is so important. It's not a hunch or a gut feeling. A real edge is a statistical advantage that you can actually measure. It means that over hundreds or thousands of trades, the math is literally on your side. It's an advantage that holds up over time, proving you're tapping into something real, not just riding a wave of market noise.
But here's an idea that really separates the pros from everyone else. Just having the numbers isn't quite enough. You also need a logical reason, a story, really, for why that edge even exists. Is it because investors tend to overreact to bad news? Is it a structural flaw in the market? Knowing the why is what gives you the backbone to stick with your strategy when things get tough. All right, so our foundation is poured and it's solid. Now it's time to actually design the house. This is the blueprint phase, where we lay out the specific rules and principles that will guide every single trade. A really strong blueprint is always built on three key pillars. First, you need total clarity and objectivity. Second, it needs to have simplicity and elegance. And third, it has to be robust, meaning it can handle whatever the market throws at it. Let's take a look at each of these. Clarity is just non-negotiable. Your entry rules, your exit rules, your risk management, it all has to be so crystal clear that there's zero room for guessing. A fantastic way to check this is what's called the third-party test. Could you hand your rulebook to a friend and would they make the exact same trades as you? If not, your rules just aren't objective enough. Now, this leads us to the surprising power of simplicity. It's so tempting to think that a more complex strategy with 10 different indicators must be better, right? But in trading, the opposite is almost always true. A simple, elegant strategy is easier to manage, it's more resilient, and it focuses on what really matters. A super complex system is often just perfectly tailored to past data, and it will be brittle, shattering the moment the market changes. And that brings us to that third pillar, robustness. This is a huge mistake a lot of traders make. They design a strategy that works great in one specific type of market, what we call a regime. For instance, a trend-following system will just get absolutely shredded in a choppy sideways market. A truly robust strategy knows what kind of market it's in, and it either adapts or, and this is just as important, it knows when to just stay out and sit on the sidelines. All right, the foundation is solid, the blueprint is clear. Now comes the hard part, actually building the thing in the real world. This is all about execution. And this is where it all gets incredibly personal. Look, you could have a strategy that is statistically perfect on paper, with a backtest that looks like a dream. But the million-dollar question is always this: can you actually trade it? Day in, day out, through the good times and the bad. This is all about what we call psychological compatibility. If a strategy has drawdowns that make you feel physically sick, guess what? You're gonna ditch it at the absolute worst time. If it needs you glued to the screen for 8 hours a day, but you have another job, it's just not gonna work. A mismatch between the trader's personality and the strategy's demands is one of the biggest reasons people fail, period. And real-world execution isn't just about what's in your head. Markets change, they evolve, so a great strategy has to be adaptable. It also needs to be scalable. Think about it. A strategy that works like a charm with $10,000 might totally break down with $1 million because of things like slippage or just moving the market with your own trades. So how do we pull all of this together and actually judge a strategy? Well, this is what we can call the trader's litmus test. It's a final check to see if the house you've built is actually sound. Okay, and here's maybe the most important mindset shift you can make. You have to let go of this idea of finding a perfect strategy. It simply doesn't exist. Designing a strategy is a game of trade-offs. If you want higher returns, you're probably going to have to take on more risk. If you add more rules, you might hurt its robustness. The real goal is to find the optimal balance for you and your goals.
And to help you measure that balance, here are a few key numbers you should always know. Your profit factor. That basically tells you how many dollars you make for every dollar you lose. You really want that to be above 1.5. The Sharpe ratio measures your return after you account for risk. And the max drawdown shows you the single worst losing streak you would have had to endure. Knowing these numbers is what keeps you honest. And that brings us right back to the beginning. So as you think about your own trading, ask yourself this question and be really honest. Are you meticulously building a house with a solid foundation, a clear blueprint, and a real-world plan for execution? Or have you maybe accidentally built a house of cards that's just waiting for the next gust of wind? The answer to that question might just change everything.